Hi, this is David. Today is Saturday the 26th of January 2013. I'm going to run through a short trade that I took recently on the cocoa futures market, showing you my Elliott Wave and Fibonacci analysis. Okay, so you can see this is my blog page, and on the 5th of December 2012 I posted a new blog entry showing a new trade I was taking in the cocoa futures market, and I was looking for a short trade on the daily chart. So looking at my blog page, I'll just bring up the chart, and you can see on that chart that I have wave 4 there, and this is the same position as this wave 4 here. So when I'm looking for a trade on the daily chart, as this is, I'd like to look at the previous price and wave action approaching the point where I'm looking to enter a trade. And in this case, I'd like you to note my interpretation of Elliott Wave as follows. Starting off at this low here, which was a significant low in June 2012, we had a wave 1 up and a wave 2 down. And that wave 2 down, in my view, is confirmed by the fact that in this area here, you can see that wave 2 retraced to just about the 78.6% of wave 1, which is what we're looking for in Elliott Wave theory. Between 61 and 786 is ideal, so that was a good retracement point. And so we got wave 2, which retraced to the 786. And then you can see here I've got analysis which shows me that wave 3 versus wave 1, this is the motorway software, which terminated nicely at the 161.8% extension of wave 1. That is simply where you take the distance travelled in wave 1 and multiply it by 1.618 and then add that to the level from wave 2. So this distance here multiplied, I'll just highlight that distance there, multiplied by 1618, and then you take that from this point here and you simply add it, and it takes you up to this 1.618 level here. Then we have a retrace for wave 4. You can see the ideal retrace, or the maximum retrace we look for in wave 4, is the 382. I haven't actually shown this, but I guess if I change my pointer and see if I can bring up the 23.6 for that. Yeah, I don't use 23.6 myself, I prefer the 382, but you can see the price stopped here just in between the two, and then it went on to make wave 5, which again, if you note the Fibonacci levels at the termination, wave 5 versus 1 was a 382, just can't see that because of the other indentation, but also the wave 5 and 3 versus 1 ended up at the 261.8 Fibonacci level. So the reason for showing all these and considering all these is simply because this gives me confidence that the instrument I'm looking at, which in this instance is cocoa, is performing or reacting to Fibonacci levels and Elliott Wave theory, which gives me confidence to look for a trade based on that principle. We've taken this as being wave 4, and then we begin our new wave count, looking for the larger degree, the yellow circle wave 4, looking for the larger degree yellow circle wave 5 to be finishing down here somewhere in this bottom right hand corner. And we have to start with a 1, 2, 3, 4, 5 waves down for the green one. Then we begin this corrective phase, which is making up wave 2, and there are a couple of things worthy of note there. It begins on the 13th of October and ended on the 4th of December, so that's 6 weeks of corrective price action. And you can see that it's fairly clear that it's corrective in that it's gone 1, 2, 3, 1, 2, 3 down to B, and then 1, 2, 3, 4, 5 for C. And one of the things I look for in Elliott Wave corrections is that the corrective price action should take place within near enough within parallel lines, and you can see this is a nice parallel line correction. And furthermore, the wave C, which is the end of the third wave of the correction there, you can see finishing at just short of the 618 retracement of green wave 1 down, which again is a nice confirming price action. And so there at that point I then considered that to be wave C complete when I saw this this bar here starting to break below this. So here I placed my order to fill me at 2479.75, which I was obviously filled on this red bar here, with my stop loss above here. Often some traders put their stop loss just above the wave 2 high, which is obviously a tighter stop, but this was a massive spike here in terms of the 29th of September, so I just felt more comfortable putting my stop there. As it happens, my stop would have been okay in the traditional position, but of course that's all with the benefit of hindsight. So I did my calculation on my money management plan and took my trade at this level here with my stop there, and you can see I'd already done some analysis showing my target somewhere down at the 2055 level. So from there we've gone down to make wave 1 down, wave 2 retrace. This is clearly a wave 3 by the impulsive nature of it. And then here we go with another correction, which starts on the 1st of Jan and ends on the 19th, so 19-day correction. And within this third wave that we're counting now, the green wave 3, you can see wave 2 was short and sharp, and wave 4 was much shallower and much longer, and that's what we look for in terms of alternation of the corrective waves 2 and 4. And also worthy of note on this one is that this wave 4 retrace 38.2%, which yet again is what we look for. So this is all confirming price action in my view, which just helps you with when you're monitoring your trade, because the hardest part of being in a trade is not entering a trade. That's easy. Entry, stop loss, dead easy. The difficult part is actually managing the trade whilst you're in it, in trying to achieve maximum profitability, but without risking too much of your profit in the process. So my stop loss, as you can see, was there. As soon as wave 2 appeared to have been complete, I'll move my stop to here, this level here. Just make that into a stop loss. Stop moved there. And then wave 3 came down, wave 4 correction, and was now waiting for this wave 5 to kick in. And obviously it has done so now, so my stop is now I haven't actually moved it, but I will move it after I finish this video. That's where my new stop loss will be. So the reason I'm putting my stop loss there is obviously with my wave count of 1, 2, 3, 4. If the price came up and went higher than this point, then my wave count at that point is invalid, and therefore I need to reassess. And in this position where I've got a nice profit already in the trade, I don't want to give that back whilst I'm reassessing. So I put my stop there. If the price was to break up above there, I want to be out. However, now you can see it's actually broken the low of this correction yesterday, and sorry, this is Saturday, so this was on Thursday. Yesterday, Friday the 25th of January, and I'm hoping now it's going to make progress down to the target. So there you go. It's my interpretation of the Elliott Wave analysis. I hope it's been useful for you. you can see the Fibonacci numbers here really being in play, and this is what I really like about Elliott Wave linked with Fibonacci. I'm a great believer in Fibonacci. I know some people say it's self-fulfilling, etc., etc. Well, you have to make your own mind up on that, but I see enough in the market, enough price reactions at Fibonacci levels, that I'm definitely a firm believer in Fibonacci working in the market. So, hope you enjoyed the video. Good luck with your trading, and speak to you soon.